right, everybody, welcome to another episode of the Execute Podcast with my guy, Desmond Washington. I call you Dub. So whenever I gotta refer you to people, I'll be like, yeah, my man Dub. I'm like, wait, Desmond Washington. Man, thank you for coming, man. I appreciate you.
I appreciate you.
Man, we got a lot to talk about, Dub, because number one, we gotta talk about the family. We gotta talk about your history. And then we gotta talk about this amazing business that you have started, Manufacturer Spending. Like, you're the GOAT in the space right now. Yes, I'm pretty sure Sheeta 3 would have something to say about that, right? Shout out to Sheeta. But we gotta talk about that and how you're leveraging credit for your lifestyle that you're doing right now, both personal and business. But to people who have just met you, like, who's this dude Herman got on the show today? Talk to the people about a little bit of history. Where you from, bro?
Listen, man, small town, Seneca, South Carolina. I come from humble beginnings, right? Just similar to anybody else. Single parent household, never really understood financial literacy. You know, it's a thing in the black household to where they say, you know, you black, you're supposed to have bad credit. You know what I'm saying? It's a thing that we kind of go by, but just come from humble beginnings, grew up working, right? And like me and you had conversation previously, you know, had a rough past, you know what I'm saying? Kind of came in, went to negative activities, you know, selling weed, small, you know, it's crazy that it's legal now, but at the time it was illegal.
Wild, right.
So, you know, kind of went down the wrong path. And then that's whenever, kind of fast forward, that's whenever I discovered, you know, the importance of, you know, your network, financial literacy, things like that. And I ran into you, bro. That's just a super fast forward to it, but.
How long ago has it been since you took the mentorship?
It was 2021, so
2021.
I'm very, very new in the space.
Very new in the space. So I want to talk about a couple of things you said in that intro, right? So, you know what I'm saying? You were a street pharmacist, you know what I'm saying?
Yes, sir.
Is it weird though, seriously, bro, to see that the shift has changed? It's more legal than it wasn't before, but our people are still locked up over it? Like, does that mess with you a little bit when you seeing everybody printing these licenses out, but we still locked up over a pound of weed?
Yeah, for real. It's crazy, but you got to understand it's a industry behind, you know, the high school to jail, you know, that
pipeline.
That pipeline. So at that time, you know, it's really bigger than us. You know what I'm saying? How we feel about different things, but it's more so it's bigger than us, and it is very, very crazy to see that, and considering the fact that I am a convicted felon behind something that is legal now that was illegal back then. But it's one of those things where you can't let nothing kind of hold you back from where you're going.
Right.
So
I'm glad you're transparent about your story, bro, because there's a lot of, I consider myself a citizen. I wasn't really in the streets, but I know a lot of people in the streets. So I'm kind of familiar with the stories. And bro, you got out of it.
Yes.
How?
My wife gave me an option. She said, this is gonna be me or that. And then, you know, one of the best things that a black man can have is his queen.
Facts.
So she gave me an option and I had to choose in between the two.
How old were you at that point?
This was, I was about 26.
26, okay. Me, I don't think a black man, I don't think a man is a man until he hit 30. Yeah. I think there's something about that 30 number. I used to tell my younger brother, I was like, listen, you have no business getting married before you're 30 because you don't know nothing. But the queen told you at 26, you got to make a decision.
Make a decision.
Best decision of your life, obviously.
Best decision, because she done gave me 3 boys now.
3 boys, man.
We building a family legacy, so.
That's what's up. So now, bro, you learned an amazing skill. Like, I gave you a little taste of it. So he came into Bellastone Academy mentorship and learned a little about credit, learned a little bit about funding. I talked for a quick second about manufacturer spending, and then you took that and you was like, yeah, I'm gonna run with that.
Yeah.
And then you went crazy with it, bro. Well, first explain to people what manufacturer spending is.
So manufacturer spending is the artificial process of spending money. So you can literally go and buy things on your credit card and then you can return it to your debit card, assuming that you use your social security number to obtain both of those.
Okay.
Because you know it's a fine line in between that people doing, you know, all type of crazy stuff. But if you use your social security number to obtain that credit card and that debit card, that's technically your money. So you can go and purchase items, you can go and purchase, you know, MacBooks, things like that, and then return it and get the money to your debit card. And it's a whole, we're gonna get into it, but it's a whole process with that. And then you're literally just turning credit literally to cash.
Literally turning credit into cash. So I taught you a little bit about it. Where did you go? Like, what rabbit hole did you go down where you became the master at it? Like, people come to you for this game. They take your mentorship now. Where'd you go? What happened?
I got active in the field because I'm a firm believer of you can't teach what you haven't done before. So I went out and I started running plays because it was, once again, I was still working a job and I was like, okay, how can I afford $200 for Pampers? I still operate as if I make $575, $600 a week.
Wait.
Yes.
Wait, hold on a second. Where were you working that paid you $500 to $600 a week?
I was working at a warehouse, supervisor.
Like 3-4 years ago, that was how much you was making?
Yes, I was making $575 a week.
Living where?
Living in Georgia.
Living in Georgia, bro?
Yep.
That was tight.
Yeah, it was very tight.
With a wife and kid?
No, at the time it was just me and my
Just you and your wife?
And then we weren't even married at the time, so it was just me and my girlfriend. Yeah.
So you kept the mindset of, if I could just make $500-600 a week, I'll be okay.
Yep.
So,
and then I just, one thing that we do often, and then, we look good up here, right? But the thing is, we're not spending money on this.
Listen, that's the game right there. Like, I knew you was coming, so I was like, listen, my man coming to do the interview. Usually I would put on my Audit Your Circle t-shirt. I was like, I know Dove is gonna come in some drip. So I was like, let me put the Louis Vuitton on real quick, because I gotta match his fly. I know how you gotta come correct. But you're right, even you taught my mentees, this is free. This is free how we run it, but go ahead.
Yeah, so majority of the time, like, most people spend money on things that they don't have the money for. You know what I'm saying? They'll go out and they'll try to look like this, but if you understand how to leverage these credit card reward points, you can get this stuff for free. But that's a little bit ahead. But I kept a tight ship, and then I was like, okay, I seen the things that I wanted, but I couldn't get it. It was like you got to sacrifice, and then we were just growing, seeing how my wife used to literally make me sit down and budget every single week. We got to a point where when we was planning our wedding, I was able to survive off $50 a week because the rest of the money was getting put up for our wedding.
Whoa.
So if it was Chick-fil-A, it was to put some gas in the car. You know what I'm saying? Once again, and I still operate that way. Like, I don't need much to survive. And on top of it, the things that I do have an expense for, I let the credit card reward points pay that now. But I'm used to being frugal with money. That's why you may see me, I look good, but I'm super cheap.
So you're on a budget. You're learning how to live off of $50 a week.
$50 a week.
Learning how to save, and the lifestyle is paid by reward points and cashback rewards.
Yes, sir.
And you've maintained that mindset for this entire time as the business has grown. Because I know you're doing a lot better because you got mentees now. You've learned a lot more. So the income has expanded, but you're still keeping a tight ship.
Yeah, 100%.
So I'm going to push back to you, right? Because people they like to stop asking softball questions. Are you scared to spend more money? Is it a scarcity mindset that you feel you're gonna lose it all? Or no. Why do you keep it this tight?
So I'm very frugal with the way that I spend money. Now I will invest into high ticket mentorship. I will invest into personal development. Anytime you see my content, I have a bookshelf behind me. I don't consider that as spending money. You gotta look at the opportunity cost of things.
Facts.
One of the guys I watch closely, like Ty Lopez, he said the $595,000 Honda Accord. The Honda Accord may be $20,000 or $30,000 right now, but the $20,000 or $30,000 that you put into the Honda Accord, if you put that into the S&P 500 and the rule of 72, how long would it take to double? Over the lifetime that you're going to be paying for this Honda Accord, you could put that into an investment and it end up being $595,000. So it didn't cost you $20,000 or $25,000. It actually cost you $595,000.
Over the 5 to 7 years you would have been paying the car
on top of interest, and then compared to where it could grow at an 8 to 10%, where we're gonna say 8 to 10.8% for the S&P 500.
That's cool, bro. Now I'm gonna think differently about cars. Now that's crazy. Wow, that's wild. I told my brother, he was like, why don't you get like a Bentley or something or a Cullinan? I was like, man, where I'm at in my life right now, for me to spend $400,000, $500,000 on a car, I was like, I don't think I can do it, right? Number one. Number two, I'm at this phase of my life now, I just want a driver. I'm gonna get a Denali, a Cadillac Caddy.
You with the family all the time.
So with the family, I just need a driver, right? I'm not gonna spend that much money on a car. Damn, Ty, you just gave me some game right there to really think differently about money. Bro, what do you, because I just, not too long ago, I just interviewed Marcus Barney, right? And he got the watches, he got the cars or whatever, and but still you stay low. So he has his reason why he markets and live the way he does. And you feel your reason is that you don't need to? Because you could stunt if you wanted to.
Yeah. But it's more so with the time freedom. It's no better feeling than me being able to wake up in the penthouse suite, and then I'm able to show my kids a better lifestyle. Like
Mm-hmm.
whenever I never went on a trip with my mother or father growing up. I always went with my aunts and uncles. You know what I'm saying? So I didn't understand the importance of travel. But you know, you had the girls out,
Yeah.
and whenever you show them
Yeah,
different experiences, and
experiences.
sometimes it's not even about the experiences. Like you showing them a 5-star, you know what I'm saying, suite. Sometimes it's going to these third world countries and allowing them to see how good they have it.
Yeah.
Because over here in America, we really forget how good we have it. And then whenever we get to be successful as Black entrepreneurs, we always want to give our kids everything that we didn't have, but we don't show them the opposite side of it. So sometimes it's really our fault whenever they are, you know, quote unquote privileged.
Right.
But we always try to go over and beyond and deliver on certain things. And, you know, sometimes I say this is it's not about presence, it's about presence. Whenever I say presence, I mean with a TS on the end, right? It's not about those type of presence, but it's the presence with the CE on the end. I'm there with you. I'm watching you grow up.
Listen, you can clip that part up. That's gonna go viral. Just clip that part up. That right there is crazy, right?
Yeah.
It's not about the presence, about the presence. That's super, super dope. It's crazy. I tell people, they're like, you put your daughters up in the 4 seasons and you take them here. I was like, I'm gonna ruin my children for you. I'm gonna ruin my daughters for you, right? So you don't play with our girls when they grow up. But you're right. Adding that duality to it, like, all right, this is what it is, but this is where I came from. But also teaching our children how we got it and how we do it and how to maintain it.
Okay, I like this.
All right, bro, because we're not going to be here forever. And they used to a certain lifestyle, but they don't know how to get it on their own. And I think that's where a lot of privileged families and children, that's why they mess up the bag, because they don't know how to keep it. Because I'm pretty sure you heard the story about the Vanderbilt family. All that money gone.
Yeah.
In like a generation or two, the money's gone. So that's why I'm really pressing my kids to give them the skill of how to make money, maintain it, and also grow it. So let's get into this community, most importantly, that you have built, the skill that you have learned with manufacturer spending and turning credit into cash. We got to talk about a couple of plays. We're gonna get into that and how it's absolutely changed your lifestyle. Because I be telling people, I was like, oh, the shoes are free. How much was the shirt? I don't know, bro. It's points. I don't really couldn't tell you. I run my business through my business credit card. I got millions of points in there. I just go buy a couple of plane tickets. So let's give them a couple of gems, bro, of how and why it's important to turn credit into cash.
So very, very important. I talk about bank auditing. Right. So literally turning credit to cash, meaning going to buy something on your credit card, returning it to your debit card. And now you have the actual cash in your checking account. But from there, what most people do is, you know, either pay the credit card back and get the points from it. But what I do now, because we're operating with business credit, we tapped into that part. I learned that from the best mentor in the game, my brother, HaitianCEO.
Appreciate you.
You know? So we taking that money and then we're going to build other banking relationships. So I could take $10,000, $15,000 off of a business credit card, but then I'm going to go to another bank that I haven't built a relationship with, and then from there I'm gonna go deposit that money.
Whoa, you gotta slow down, bro. Hold on.
Can we get spicy?
You about to teach,
quick,
bro? We don't have the whiteboard. I would have brought the whiteboard out for you, bro.
Listen.
Hold on. All right.
I gotta teach, bro.
So I get a Chase business credit card, 25 piece. I take 10 off of it through manufacturer spending tactics.
Yes, sir.
I take that 10. Right, I got the points too, but I take that 10, I make a deposit in like U.S. Bank to start a relationship with U.S. Bank. Because I tell y'all all the time, start relationships with these different lenders because it's gonna go along. Don't just hit them up and ask them for money. Open up a business check and business saving, make a deposit. But now you're giving the game on how to make a large deposit. How long would I keep the large deposit in there before I run a play?
I wouldn't go and just deposit the 10K at once. I would build out a deposit relationship.
Okay.
So you take the $10,000 off, it's into your checking account. You can ACH $2,500 this week, $1,000 the next week, $1,500 the following week. And you want to build it at minimum for 60 days.
Okay.
Minimum. It's good to go 90 days, but you could go minimum 60 days and then build out that deposit relationship, and then you ask for the money because you want it to look as if you have consistent inflow, the deposit inflow. What is that looking like? Because banks have what they call a bank internal rating.
What's that?
That's where you literally based off of how much money that you have over a 90-day period.
Yep.
So the low 5, you know what I'm saying? You know I gotta teach, bro.
Yeah, you gotta teach. The low, bro. It's the low. You want a low 5 internal bank score. Yes, that's what you want to get.
So that's why I start with the 10,000. You know, that's really all you need, but you want to make this inflow to the account over the course of anywhere from 60 to 90 days, and then you ask for the money. Because we're all familiar with fractional reserve banking. Anybody that follow your channel, we know all
They
about
better
it.
know what fractional reserve lending is. Yeah, if you put whatever money you put in there, the bank is gonna lend it out 10 times that plus the interest, and that's how banks make money.
And it's crazy that I just dropped a reel today. And do you know in March 25th, March 26th of 2020, the reserve ratio dropped to 0% because they used to have to keep 10% of the actual funds in the bank. But ever since 2020, they lowered it to 0. So now you could put $100,000 in the bank is going to lend out $100,000 of that. So the full amount.
Whoa, wait a minute. When did this happen?
During COVID, March 25th or March 26th to be exact.
I definitely missed that, bro.
Yep, and then they have not switched it back from 0%. So now, right, just look at the economy as a whole. So now imagine whenever they go back to the reserve ratio, they're talking about making it go back to either 8 or 10%.
Okay.
So now they're going to have to keep that liquidity inside of the bank. If they don't have that liquidity inside of the bank, they may go under. That's where you're going to see a lot of different mergers with other banks. You're starting to see it in 2024.
You started seeing it, yeah.
But what happens in the credit crunch? Now, because they don't have the money to lend out, it affects us as business owners.
Business owners, yeah.
So
I started to see, I remember people who were getting $25,000 credit cards. I remember for a little 90-day span, I think they were testing the crunch, bro.
Yes.
I remember they started crunching just a little bit, man. I had clients that were getting $25,000 with that profile, and then they started just getting $10,000. And I didn't know what was going on. And I have relationship managers. I'm like, what's going on? It's like, listen, everything is tightening up.
Yes.
Do you feel in your funding space that you've been doing too, that you've been seeing a tightening, or is it eased up a little bit for you?
Yes, it's definitely a tightening for sure.
Okay. Right.
But you got to look at the economy as a whole. Regional banks, that's where majority of business owners get access to capital from. But if you look at the regional banks, you'll see that their, asset quality, they lend out heavy to commercial real estate, and the commercial real estate sector is not looking good right now. So yeah, bro, this is what I do.
This is what you
know
do,
what I'm
bro.
saying?
I
studied the banking industry, and trying to give our people an insight on it, because sometimes, we just look at, okay, what bank is giving out the bag, but it's much bigger than that. What is the overall sector of the banking industry looking like in this current moment? Got you.
Yeah. So let's circle back. I put the 10,000 over time inside of U.S. Bank, the secondary bank, after I liquidated it. And now I'm going to start a relationship 60, 90 days later that I ask them for funding.
Yes.
Now, combined with my good credit, they're going to pretty much, we're not going to guarantee anything, but it's a more likely than not, they're going to max me out in terms of the funding that they're going to give me.
Yes, sir. And
Got you.
Do it. But so we know that U.S. Bank is going to pull from either, majority of the time they're going to pull from TransUnion, but geographical location, they could pull from Equifax. So you always go to the banks that's going to pull from your highest bureau. So if, let's just say that Experian was your highest bureau, you wouldn't need to go to U.S. Bank. You would go to another bank such as PNC.
PNC, Chase, Amex, right.
Yep.
Right. I tell people to do that. Whatever your highest credit bureau is, that's where you want to do your funding first. So that's part one of liquidating the credit card, turning the credit into cash to get more funding later on down the road, so you can maximize your funding. What else is a good reason for doing manufacturer spending? Like, what's the point? Why else would I do it?
You can generate, depending on how hard you go with it, you could generate, a good couple of $1,000s a month.
Couple thousand a month.
I was doing at one time whenever I was very active in the space, like $2,000-$3,000 a month just in cash back. But you got to know what cards to get. You got to know, like, let's just say whenever you check out with PayPal, they're going to give you 3% cash back. Whenever you go through certain, cashback websites, Cashback Monitor, Rakuten, Active Junkie, all these, they're also going to give you cash back, and then you're paid out on a 90-day time cycle. So you running these plays, they don't always see the return. So now you're generating cash back off of the credit card, and you're getting cash back from these websites as well. You merge them, and then, like I say, man, you could definitely replace your W-2 job just for manufacturing.
You talking heavy, bro. Talking heavy. Can I tell you how I tripped into manufacturer spending, bro? I bought a pair of shorts from Nike. True story. Bought a pair of shorts from Nike, and they didn't fit. So I went back to the Nike store in Miami on South Beach, and I literally forgot my wallet in my car. And the dude was like, I was like, oh, let me go back. He's like, oh, you have your phone? I'm like, yeah. He's like, you have your debit card on your phone? I'm like, yeah, I do. He's like, okay. Pulled up the debit card, bing, $100 went back to my debit card. I was like,
Yep.
ball game. So do you remember when Drake had the heart jackets? I forgot what they were called. The Lover Boy jackets, I think they were called. Them things were like 2, 3, 4, 10. I don't know. Let's say they were 10 grand. I bought like 4 or 5 of them off the website, went right back to Nike.
Yep.
Got my money, got the cash back, and I was like, oh my goodness, I just made $1,000 just returning it, the stuff back, and I had $1,000 in cash back rewards that I could have used to go buy a nice pair of products.
Exactly.
You know what I'm saying?
Yep.
Just for making the trip back and forth. So that's the second good reason, getting the cash back. Now, how about points? Why is leveraging manufacturer spending for points a good idea?
So each credit card is going to give you either points, they're going to give you miles, etc. Right? And whenever you get the points, actually, I tell people all the time, go for the points over the cash back. If you in that position.
Why?
Because points are more valuable than
cash back?
Yes.
Talk to me.
Because you can go and transfer to a different portal. And then let's just say that you want to, let's say you do Hawaiian Airlines or something, right? And then Hawaiian Airlines may be a partner with Delta. So now you could book a Delta flight with Hawaiian Air Miles. And whenever you transfer the points over, American Express could be giving you a 30%. So for every 100,000 points, you get an extra 30,000, which is equivalent to $300.
Got you.
So now you're able to transfer those points instead of just getting the cash back, which is going to be the lowest value
possible.
Anyway.
Yeah,
exactly. You use those points and you actually get 1.3. Because anytime you go and spend money on your credit card and you want to redeem your points for the purchase, you're only getting about 0.6% of the actual dollar. So 60% of the dollar. Yep.
Got you. So that's why you do it. So what are the best partner portals that you use to do transfers for points? Like, I run it up on American Express. So where should I move those points to?
It's going to be depending on whether you trying to expand it for the hotel, whether you're trying to get it for the flight. But the two of the best transfer portals are going to be American Express and Chase Ultimate Rewards. Okay. Those two right there, or those two issuers, they're going to have the most point valuation. Because you could get, let's just say, a Capital One credit card. You know what I'm saying? I don't recommend getting a business Capital One card.
Definitely don't do that.
But their points are not as valuable as Chase or American Express, and it's going to vary depending on where you transfer the points to.
Got you. I never really thought about that. So I could rack it up on American Express, but then go into the transfer portals to transfer those points to one of the airlines that American Express is connected to, one of the hotels that they're connected to. Right. And then you're getting a better rate on flights.
Better valuation of the points.
Got you. So cash back though, what are the best cash back reward credit cards that you love?
So I'm going to go with, because we only operate on the business side. So I'm gonna go American Express Blue Business Plus. No, the Blue Business Cash, because the Plus give the points. The Cash give the cash back. Right. Also the PayPal business card, super easy, quick 25K. Are you good experience? You apply for it, 25K. You know, Experience by far our best issuer. Or best bureau, because
to pull from. We know how to wipe the inquiries off in 24 hours, so we run it up on the Experience. So hold on. So PayPal has a credit card.
PayPal business credit card.
You got a business credit card. You got a decent credit score. Up to 25,000.
Yeah, 25,000 easy. They handing that out. Yeah.
Really? Do they have points? What are their points or cash back?
No, this is for cash back.
This is for cash back. Yeah.
Yep. And then whenever you check out using PayPal, you get an extra 1%.
Time out. We're going to get back to the show. But listen, we have to talk about Bella Sloan Academy, the dopest mentorship on the internet. Listen, in this mentorship, we're going to teach you game. We want to put you in position for the win. And we have created a dope community of like-minded people and entrepreneurs just like you. We have 5 live Zoom calls per month. Not just your regular videos that you can watch later. No, we want to touch you and we want to talk to you. In these 5 Zoom calls, you have your accountability call. You have your credit repair call. You have your business funding call. Listen, I don't know everything, so I get masterminds to come and teach you guys about credit, real estate, and other businesses that include trust, life insurance to put you in position for the win. This is only $50 per month. That's right. This investment is super, super low. Put yourself in position. Back to the show.
So listen, you asked for the best cash back credit card. It's a difference between a cashback credit card and a true cashback credit card.
Oh, what's the
The
difference?
Blue Business Cash is going to cap you once you spend $50,000 within a billing. I mean, once you spend $50,000 within
A year. Uh-huh.
it's no longer a 2% cashback credit card. It's now a 1% cashback on purchases after $50,000.
That's hate. That's hate.
See what I'm
So they
saying?
dropped it down from 2% cash back. So so to my people who are new to the channel, what does that mean? So if I spent $10,000, 2% of that is what I can get in cash back.
Right, up to $50,000. So let's just say that 2% of $50,000. That's the cap you. I mean, that's the max that they cap you out at once you spend that 50. Now, any amount, any dollar over 50,000, you're no longer getting 1%. I mean, you're no longer getting 2% cash back. You're now getting 1%
1%
cash back.
And this is why you brought up PayPal.
Yep.
Do they have a cap?
No, they don't. That's a true 2% cashback card and 3% whenever you check out through PayPal.
Oh, that's cold-blooded.
So let's loop it back around to the manufacturer spending. Certain issues such as Ulta, right? If you go to Ulta and you check out, they will always give you an option to check out with PayPal. You have Apple Pay, you have PayPal.
Yeah.
Certain issuers can't return to PayPal, so now they give you an option of putting the money on another debit card. Yeah. So it's multiple facets.
There's multiple. Man. That's wow. So now I'm getting 3%, almost unlimited. And this is what I can use if I'm in a tight bind. I need to cover rent. Listen, you giving the play out and cover rent, how to pay down credit card debt, right? Because this is what I tell people. I was like, listen, run up these MS plays so that you can pay down debt at first, and then go get the drip. Go get the drip for free.
100%.
So what else true? Is PayPal the only true cashback credit card out there?
No, it's PayPal is one. I want to say and while we would not advocate for, I think Capital One has a true. They may be 3% cashback, but you should be paying that off in full every month anyway. Simply because you gotta, it's gonna report your utilization to the bureaus.
Yeah.
And I want to say that some of the Elan financial cards, are true cashback cards, depending on which one. So, but it's going to be a lot to people who don't understand, but we got to get spicy. So whenever you go Elan Financial, typically people, whenever you go for funding with them, you're wanting the 0% APR phase.
Right.
So don't get a credit card just because it's cash back if that's not your personal sequence right now. Because you may need a 0% APR for 18 months to pull into a real estate deal, or to go out and build other banking relationships. But just starting out, cash back is going to be your friend. But once you get to the business side, I would recommend going for longer APR phases. But Elan Financial do have some true APR credit cards, and then they underwrite for a lot of different credit unions as well.
So Elan Financial is to our new people, is like what do we call them? A lender?
They're underwriter.
They're underwriter for many banks.
Yes.
Now, isn't there a cap to how many Elan Financials you can get?
Yes.
So talk to the people about that.
Listen, we're going to teach.
We're going to teach a little bit, yeah.
So once you get to anywhere from 3 to 4 Elan Financial cards, they will cap you. And the reason why is because they underwrite. A lot of people think because they're going to different credit unions and different banks, I'm going to go here and I'm going to deposit this and I'm going to go run some plays. And then you don't understand that the underwriter is Elan Financial. And whenever you get to the 3 or 4 credit cards, they're either going to start denying you or they're going to start giving you lower limits. I tell people all the time, whenever you're going out on your funding strategy, what's your underwriter usage?
Gosh, you got to know that.
You got to know. Because if you go to 3 or 4 different credit unions, but they all underwritten by Elan Financial, and you have 2 or 3 other credit cards that's maxed out, they're the underwriter. They're not going to give you another $25,000, $30,000 credit card.
They're not going to do it.
The underwriter usage is too high.
This is why you need mentorship. This is why you come to mentorship and learn these things, because people's trying to start funding companies. Like, I only got my client $3,000, but you didn't look at your client's profile to see, your client's maxed out.
Yep.
That's cold-blooded, bro. So after somebody gets their 3 to 4 Elans, they're done. Like, they can't get any more?
They can get some, but the limits are going to be lower, and you would have to probably provide a lot of documents to show why you need access to more capital from this institution. That's why we always preach, go to different institutions that offer different underwriter rules. Got you.
So there's many, like if I reach my 3 to 4 Elan underwriting, there's plenty of banks I could still go to run up the bank. Like, it's not the end of the world.
It's 4,600 banks and 2,300 credit unions.
Dang, 2,300. That's crazy. Outside of the Elan space.
Yes.
So there's many to do. Bro, talk to us a little bit about how you got to teaching this, right? Because I know I'm going to check the comments later. This is a scam. This ain't right.
Yes.
Let's talk, because they're going to be like, why aren't you talking about it? How is this legal? Is this legal?
It's 100% legal.
So why does manufacturer spending have a bad name?
Because a lot of people it's no different than a loaded gun, right?
Mm-hmm.
You can put a gun in the hands of some people, it's a positive tool, right?
Mm-hmm.
In the hands of other people, it's a negative tool. But with any type of information, it could be used for, the positive or the negative. You see what I'm saying? So what happens is a lot of people get access to this information.
Mm-hmm.
That's why we keep it close to mentorships. You know what I'm saying?
Mm-hmm.
Because whenever the wrong people get access to this information, it's able to do harm.
Are you believe in gatekeeping?
No.
No, you don't believe. So you believe in giving out the game?
Give out the game.
Not even like a little bit of gatekeeping so they don't run the play and mess it up for everybody? Like,
I mean,
how do you balance that, bro?
You gotta know what plays to give out. You gotta know at what level. I wouldn't tell anybody to go out and run a, let's just say, $20,000 or $30,000 play if they don't have the proper mindset based around the money.
Gotcha.
Because I have shown my own family, right? Let's get into it. I shown my own family how to manufacture spin, and they didn't properly follow it, so they let $25,000 stop them from getting access to $250,000. I tell them, you let a little bit of money keep you from getting access to a lot of money.
A lot of money.
Because if you don't have the right mindset, like to somebody that's in the hood, right? And they learn this skill of manufacturing spin, they take the money out this credit card, and you got $20,000 sitting right there.
Cash in your bank account.
In your bank account.
0% interest.
Come on. And you used to having bad credit, they gonna fumble that bag.
They gonna fumble the bag every single time. Every single time. So I get a lot of questions about this. They like, Herm, because people believe that, Herm, you don't gatekeep, we love you. I'm like, yeah, I give a lot away. But I was like, you'll be surprised what I don't give away.
Yeah.
Right? They was like, you gatekeep? I was like, I do. I'm not gonna lie to you. But I give away so much information, and you hit it on the nose. I never said it, I never thought about it like that. There's levels to the information that you can get. So like I'm probably never gonna have a boy, but my boy, I'm not gonna give my boy a razor. I'll give my teenager a razor. There's levels to the game that I'm gonna give you. If I see you do good with this, and I'm gonna take you to the next level. So like on God's internet where everything is free, there's a lot of free game that I can give you to get you to the next level. And I tell people, I'm gonna give you game so that you can run up a bag, so you can pay for my little $50 a month mentorship.
Exactly.
And then in that mentorship, I got different game in there. My 10K mentorship, there's different game in there. And then when people want to learn to do exactly what I do, we got a 25K mentorship. So there's levels to the game I give, but I definitely believe in levels of gems and gatekeepers. I don't believe necessarily in gatekeeping, because somebody gave me the game and then I ran with it, and you see we here, bro. And then you found your own niche and went crazy with it. How are you going to leverage this information to build generational wealth?
Man, you take it, and then the number one thing that I think that anybody can do is get access to capital by building banking relationships. If you understand the banking industry and the banking sector as a whole, you're able to leverage it at a different level. I tell people you can only operate at a level in which you understand the game. Somebody that's playing the sport is only operating at this level, but the coach is here. The GM is here, but the owner is here. And depending on where you operate in the game from, that's how you're able to leverage it. So I'm literally I got rich off a niche. So I'm taking this manufactured spending to, one, build my credit report, get access to multi-seven figures in funding.
Right.
But then I'm gonna take this and build out corporate structure, real estate. Like me and my wife, we're now doing Section 8 and long-term rentals now.
Right.
And this all started from me learning how to leverage credit. And the rest is history, bro. So that's how I plan to, that's literally my journey from where it started from. Yeah. Paying $200 a month for Pampers, trying to figure out how I can gather some extra cash, to now I'm putting it into real estate and building out portfolio for my boys. You just
messed me up here, and I wanna hit on something you just said. There's levels to this. You at the player level, the coach level, the GM level, or the owner level. Which level are you at? Like, where are you playing? Because depending on that, depends on the level of information that you need. Because a player might not understand the decision that a coach is making. Come on. The coach might understand the decision a GM is making. GM doesn't understand what an owner is making, because I have different responsibilities. I'm looking ahead. So like, players might not understand why it's time for Tom Brady to leave. Exactly. Because I gotta get I gotta figure out the next 10 years. Exactly. Got you. And the owner is making decisions on money. Like, I can't give him the $100 million contract.
Exactly.
I've
Yep.
never thought about it that way. That's absolutely wild. So now you messed me up because you're thinking about how to pay diapers to leveraging the credit that you're making to put it into real estate deals. So on a high level for the people listening, I get a $25,000 business credit card because we love getting business funding because it's not reporting to your personal. I take off a $10,000 off of it, 0% interest. 0% interest off $10,000 is only $100 a month.
Right.
That's it. And then I leverage that to put it into a real estate deal. Now, bro, this is a lot of numbers.
Yeah.
This is kind of scary. Oh, it sounds scammy again.
Yep.
How did you learn to leverage credit to put into different investment vehicles?
It's one, you got to do your due diligence and study different ones. It's said that 90 to 94% of millionaires have real estate in their portfolios. So it's just following the money. That's the main thing that you got to do, is just follow the money and don't do what we've been accustomed to doing. Get access to all of this credit and then crash out with it.
Crash out.
Listen, one of the worst things, I think my guy Meek Mill said, I used to be a used to. You know the song?
No.
Whenever you used to be that man, I used to be a used to.
I used to be a used to.
That's the number one fear of me, of going
you,
back what I
you.
used to be.
I don't want to be that anymore. I can't go back. So I can't
go,
fumble it.
You can't fumble.
Now you got 3 boys now, bro?
Yes, I got
3
so
boys. Now I got 2 girls. I used to be a social worker, bro, making $30,000 a year. Now we talking about tuition is $30,000.
Yeah.
I don't have a choice. There's no way I can go back to it. So I have to continue to use what I've learned to leverage it, to make more money and to continue to grow and expedite it. I want to talk about scamming for a little bit.
Okay.
It's popping on God's Instagram right now, right?
Yeah.
Popping,
Yes.
the scamming. How have you avoided, because I think I've been scammed. I call it tuition. That's my tuition. I learned a lesson learned. Talk to the people a little bit about how to avoid getting scammed with mentorships or people giving them game. Like, what have you done to make sure that people haven't taken your hard-earned money?
I vet people out. I'm gonna follow your content, and then just, energy transfers. So anytime I'm, looking to invest into a mentor, I'm looking to see the receipts. My favorite mentor tell me success got receipts, right?
Success got receipts, man.
So it's always about, not more so about what you can do as the mentor, but what about your mentees? What are they doing?
What are they doing?
It's way more fulfilling to have someone come up to you and say, the information that you gave me access to has changed my life. No amount of money can replace that. Whenever somebody walk up to you that you may see in the airport and they come in and say, Doug, listen, man, I've been following you for the X however long. That one play that I got from your Instagram live, whenever I heard you speak in Herman's mentorship, that changed my life.
That changed my life. Isn't that crazy, bro?
I went in and this is gonna get it right here. I went in Dana Christian mentorship, right? And then I was speaking on manufactured spending. There was a lady about to commit suicide. She lost everything. Her husband took around 100 to 150 grand from her. She was depressed, down and out. She said she came on that, something told her to come on that call. She came on that call and she got her restaurant up in Florida right now.
What?
So because she knew how to get access to cash from the credit cards, that changed the trajectory and then let her have a new path. Because she didn't know how she was going to pay for anything.
Anything. That's great. Because what people are not understanding, what you're teaching, I hope they're not missing it, is that not only are you teaching them how to get the funding, how to manufacture spend, but listen, I just got $10,000 in debt, but you're showing them how to pay for the debt while you're running the plays. That $10,000 that you're putting in U.S. Bank, well, let me show you how to get the $100 a month,
right?
To pay that, so you're not running it. I think that's super dope. I remember when Marcus, when we were first in his mentorship, and he would teach people how to liquidate the cards. And on the personal side, he's like, listen, you could use it as a trade line.
Yes.
So you use it as a trade line, pays for itself. Now you're using the capital to run the business, but the trade line is paying for itself, so there's nothing out of pocket. But understanding how to do it. At the level you are right now, as you're growing your assets out, right? Let's talk about the protection and how you're going to pass that down to your children. This information that you have up here, we talked about it offline, bro. I want you to tell the people how you are passing down this information to your boys.
Meaningful content. That's what I call it. And I got a notebook that I keep. and it's called the Washington Legacy Blueprint.
Mm.
And nobody is going to understand us more than our children because they look at us from a different angle. So whenever you're having a hard day, just going through, and some people look at it as lame. You know what I'm saying? Like my partner's back home, they're like, bro, you lame, you journal? But what I'm doing, like seriously,
Right.
but what I'm doing is expressing how I felt. Like today, I'm gonna go home. Listen, man, I went on my mentor's podcast and had a conversation with him. Never did I see myself in that position whenever I first started. You remember, I was scared as hell to come and speak on your platform.
Yeah.
But back to it is I literally journal to them, let them know how I feel, why I make certain decisions. Because we went and obtained a lot of this information, and we forget more information than a lot of people will ever know. And one of the best things that you can do is put things on paper. And passing down assets and passing down wealth, sometimes it's not in the form of, let's just say, like monetary wealth. Sometimes it's mental wealth. Because if they don't understand why we think the way that we think, why we operate the way that we operate, if we're going through depression, you know what I'm saying? Like different people, you don't have to tell people, pass it down to your kids so they know where it comes from because they may not handle it as well as you. You know what I'm saying? So I pass that down. I shoot content. I had a camera on sometimes and I just talk to them and I'm talking to them as if they are already 15, 16 years old.
Wow.
A KD, a KK, a King. This is why I do X, Y, and Z.
That's dope. That's dope. I was telling you, you do it at a much higher level. You're shooting content and you're writing journaling.
Yes.
So what I did for my daughters, I got their names, I turned it into emails, and then I write them emails since they were infants. And one day I'm gonna give them the password, and then they could read what their father was thinking when they were born. Like I remember when Bella was birth, I wrote this long email. I was like, girl, you on your way here. They trying to cut your mom open, but I had to pray. I was like, we're not leaving here with a C-section. And I'm leaving her that type of information. So I think that's one good important thing on top of what you taught today is how to pass down this information on how to keep wealth. Because they see me talk about it on Instagram all the time. Trust, holding company, make sure your attorney knows everything because trust over wills, trusts are more powerful. But I could talk about this, but if I ain't tell my daughters about this information, how to fund a life insurance policy, right? Do the waterfall method like the Rockefellers. If I ain't teaching them that game, how we get this, I got to teach them how we get this money.
And we're relying on, not to even cut you off, but we're relying on social media and other influencers to teach them because you know how easily it is to get distracted in this space.
Yes, bro.
For people that look like us. You put something flashy up. That's why we crash out for things that we don't even see as valuable anymore.
Do you think we are responsible for the state of social media? Or is it the other way around where you won't pay attention to me unless I have a Rolex or Carti's on? What comes first, the chicken or the egg? Ooh, it's a tough one.
It's unfortunate, but my wife got onto me about this whenever I first started was whenever you get online, man, to catch our people's eye, you have to look a certain way. Otherwise, you're not going to get their attention. It's unfortunate, but you have to understand our mindset and our mind state and where we come from, but to leverage it in a good way. So I think that, if you don't see the Rolex, if you don't see, the red bottoms and all of these things, people are going to look past it because to some people, that's what their goal is. Until we get access to them and let them know, like, bro, what you aspiring to have, we show you how to get that for free. So now you can put the money in the assets. So that's my take on it.
I got you. I never thought about it that way. That's actually dope. So, bro, before I let you go, you got to give us one more gem. One more gem, one more play, real quick. How to turn credit into cash so these people can go and invest in themselves and not in drip.
Let's go. All right. So one of my favorite plays right now that people are doing is. It's only for you, bro.
Only for me.
It's only for you.
It's
only
just us in the room. Talk to me.
So if you want to do it at a high scale, right? Like you can go to.
I feel this one's hurting you. That you about to give this one up. I feel it. Go ahead.
You can go. If you need to access quick 8,000-10,000, we probably gonna kill the play with this, and my mentee's gonna kill me. But listen, so Neiman Marcus is a good play.
It's a good play. Okay.
They're used to seeing high spend. So you can go and liquidate a quick $8,000 to $10,000 just like that.
Just like that. Through Neiman Marcus.
You can go get you some Amiri, get you a couple, you know what I'm saying? And then you can liquidate the money, and then you good to go right there. That's for high level. You know, you need your quick access to 8 or 10. But we're not taking that money to go out and blow. We're taking that money to liquidate, to go out and build banking relationships.
Banking relationships. That's super, super crucial.
That's the main thing that we're doing.
Are you familiar with the Navy Federal Pledge Play?
Yes.
So
that's another good one.
That's another good one, to take that money and put it into a pledge loan, pay 90% off, and then run it up for 24 months.
Easy. Yep.
Easy.
So a lot of other institutions, credit unions have what they call that's the shared secured loan.
Shared secured loan.
Yep.
That's what I was gonna say. I saw a class where the dude was like, get 3 of them. Take the money from Navy Federal, go to another bank, take that money, go to another bank, and now you got these 3 lines basically paying each other. For up to 2. So you've heard of that one?
Yep. You could do it. You can actually do it 3 times with Navy.
Okay. Yep. And 3 trade lines will show up on your personal.
So you wouldn't want to do it with the same amount. So let's just say that you got the $25,000 U.S. bank card, right? You liquidate the money off of it. Go and put $25,000 for one shared secured loan. You run the play, you pay it off, they release it to you, you pay it off again to have 90% shown as paid, money back in your account. But now you go back again and you run it for $22,500.
Oh, you keep dropping it.
You drop it and then you run it down to $20,000. You don't want to run it for all $25,000 because they may think that it's a duplicate account or something is wrong with that. So you do $25,000, $22,500, and $20,000. And now you have 3 primaries.
Now you have 3 primaries showing on your
90%.
And this is this play right here is for my people with new credit, or for my people who are fresh out and they're trying to build up primaries. They be like, yo, you selling primaries? I was like, bro, let me show you how to build your own primaries over a certain amount of time. Because actually having a loan on your credit report is very, very strong.
Yes.
Especially for 2 years. That's a good way to end the podcast today. So, bro, real quick, I actually got this from Dave Shan's podcast about asking this final question. You've built something amazing in the last half a decade. Where do you see yourself, your family, the business? Where do you see yourself in the next 10 years?
Man, and I'm gonna take it further than that. In the next 10 years, you know, money and assets, you know, real estate. Like I said, we're gonna be big into Section 8 and long-term rentals. But I always put this vision up for, you know, myself and people that follow me, they kind of know me by this, is I look at it as the picture over the fireplace.
It's a good one, yep.
So at the end of time, I want to be able to look back and my generation that came after me be able to look over acreage in this estate, and they're able to say the information that king right there got put us in this position to where we have everything laid out for us.
I love it. I love it. That picture over the fire. That's great grandpa right there.
You see what I'm saying?
Yeah. And so all this is because of him.
That's zooming way farther out past the 10 years. But
you know, the word says a wise man leaves wealth for his children. So right now, I tell people all the time, the plays that I'm running in right now is for my grandkids, the generations that are in the womb of both my daughters right now. So that's what I'm playing out. Because I was like, listen, I'm good. I was like, if I even fumbled the bag, my kids got life insurance policy. They're going to be millionaires off of that, so they're good. So I got to make sure I pass down information to them so they can multiply it for their children. Dub, listen, you got a mentorship. You're on Instagram. You're everywhere right now. If people want to hit you up, tell them where they can find you, bro.
At Dub Washington on Instagram, across all social media platforms, and then you can text EAT, E-A-T, to 404-737-4143.
We love it. We love it. Listen, if you want to know how to get your credit together, how to get the funding, now that you got the funding, how to liquidate and manufacture the funding so that you can get cashback rewards, points so you can travel for free, pay your rent and car note for free. This is what he teaches. Then take that money, it's full circle with you. Then take the money and show them how to leverage it to invest into things that make money generational. They need to hit you up. Dub Washington on all social media. Man, I appreciate your time. I know it's valuable, and you got to get back to these kids. Thank you so much. Thank you, everybody, for tuning into another episode of the Execute Podcast. Haitian CEO. I'll talk to you soon.